Wait! Before you invest another 1 naira, you need to know this. There are 3 categories of investors, and choosing the wrong one could cost you years of progress. Let's find out which investor you really are. Do you know 2 people can invest with the same amount today, but 5 years later, the results are different? The investing style are different. Most people lose money not because they are bad investors, but because they are investing like someone else. In the next few minutes, I'll be breaking down the 3 categories into 9 major types of investors, and then you will find out exactly which one you are. And trust me, at the end of this video, you might completely rethink how you invest your money. Common mistake most beginners make: they see someone making money from crypto and jump into crypto. They hear a friend made millions from stock and rush into stock. They watch a real estate guru and suddenly want to buy land. But investing isn't one size fits all. The best investment for someone else might be the worst investment for you. Let's see investors by risk appetite. We have the conservative investors. It can be termed as low-risk investors. Meet Sarah. Sarah values peace of mind more than massive profit. She doesn't want to wake up and discover her investment dropped to 40% overnight, so she invests in safer assets. Her returns may be low, but she sleeps peacefully at night. For conservative investors, protecting capital comes before growing capital. The next is moderate investors, which can also be known as medium risk investors. Now meet James. James wants to grow but doesn't want heart attack. He really takes some risk but not reckless risk. He spreads his money across different investments like stock, bond, mutual fund and real estate, so that if one struggles, the others will help. Most successful investors fall into this category. Now we'll be looking at the aggressive investor, also known as the high-risk investors. And then we have Alex. Alex isn't interested in slow growth, so he invests in stock, crypto, startup, options. He understands that higher rewards often comes with higher risk. Of course, the road to massive gain can also lead to massive losses. A quick question: which investor are you right now? Conservative, moderate, or aggressive? Comment below before we continue. Let's see another category of investors. Investors by time horizon. So we have the short-term traders, we have the long-term traders, and also the income investor. So the short-term traders, these investors think in days, weeks, or months. They profit from price movements rather than long-term business growth. The challenge is that you must constantly monitor the market. Now let's see a different kind of investor. These investors buy quality assets and wait for years, sometimes decades. They understand a powerful force called compounding. This is a strategy used by great successful investors. The income investors, some investors aren't waiting 20 years, they want their investment to pay them now. So these kind of investors look at dividend stocks, rental properties, and including bonds. Their mindset is simple. They focus on generating cash flow rather than chasing huge price gain. Here is something surprising. The richest investors often combine multiple investing styles instead of choosing only one. But before I explain how, let's look at the final category. Investment by strategy. So we have the value investor. The value investor, they love bargains. Their philosophy is simple. Why buy 100 naira when you can buy the same thing for 60 naira? They spend time searching for companies that are undervalued. The next is the growth investors. Growth investors think differently. They don't mind paying a premium if they believe the company can become much bigger in the future. They look for innovation, expansion, and market dominance. Finally, we have the index investor. Instead of trying to pick winners, they buy the entire market. One investment can give you the opportunity of having hundreds of companies. This strategy has quietly created wealth for millions of investors worldwide. So what type of investor should you be? The answer is, it depends on you. A young investor might be aggressive and growth-focused. A retiree might prefer income and conservative investments. And many successful investors combine strategies. The biggest investing mistake isn't choosing the wrong stock, it's choosing the wrong investor personality. Because when your strategy matches your goals, risk tolerance, and timeline, investing becomes more easier. On the comment section, type the kind of investor you are. And if you have learned something new today, subscribe for more simple investing lessons.